Hello and welcome to the next weekly bias. As I expected last week for the US dollar to go bullish, it was a big bullish week on the US dollar. My target, again with standard deviation, is still exactly this high. It's -2 standard deviation. It's the drawn liquidity. You can also see a retracement next week into here. It's order block. On the weekly chart, so it's an important level. We could see a retracement in here, but we could also see a direct displacement into liquidity. Now let's go over to the S&P chart. As I said last week, it's S&P divergence. I expected bearish price and it delivered beautiful. So we respected on the weekly chart this order block right here and went after that only down. On the daily chart, you can see this breaker in here that got really respected and it formed after that the order block. My next drawn liquidity is with standard deviation on the daily chart. Here is the low that formed and -1 and -1.5, probably rather -1. On the 4-hour chart, you can see S&P divergence with NQ. And if you take your standard deviations again, you can see from here to here, it's the low of the week on the pip, on the tick, and -2.5 is this low, and -3 is this low. So that's my draw for next week. It's bearish, and I would myself trade only S&P next week because it's not as sloppy as Nasdaq, and S&P says it's even more bearish than the NQ chart. Basically, just look at NQ chart. There's liquidity above and below. You don't want to trade that.